How much commissions do insurance agents actually make? Let's be real. Do insurance agents really earn that much through commissions? Do insurance agents truly take interest in your needs, or are they here just to make a quick buck? Let's dive into the types of commissions insurance agents can earn to understand how insurance agents earn their commissions. Let's start off by talking about the types of commissions. I'll be very transparent about how insurance agents actually earn money. Firstly, direct commissions. Insurance agents usually get paid commissions based on the product sold to you, meaning that the policy you buy from them does directly influence how much they earn. They earn the most from commissions in their first year of closing the sale and then receive renewal commissions for the next 5 years as long as the client does not terminate the policy. Of course, this idea of selling once and getting paid for 6 years does not sound like a bad deal after all, which is why some insurance agent may become distracted by the monetary potential and prioritize selling the more high premium policies over their clients' interest. Different agencies also have different commission tiers. However, usually the longer the client pays for a policy, the more commissions they earn. These commissions come from a percentage of the policy premiums. As you might have heard, buying your policies while you're young and healthy will let you pay lower premiums. This also means that the commission earned by the agent through these policies sold would be less than the commission earned from the policy bought by an older person with pre-existing health conditions. So depending on who you sell the policy to, your commissions would vary. So it's a matter of fact that insurance agents are salespeople to a certain extent, and commissions do play a part in how insurance agents sell the policies. Hence, as a client, it is important to know of this conflict of interest and do some research so that you can decide if the agent's recommendations suit your interest or not. Next, bonus renewal commissions. The term for these bonus commissions vary from each company. Some may call it career benefit, while others may call it persistency bonus. Agencies or insurers usually reward their agents for keeping clients satisfied and ensuring they renew their policies instead of just terminating it. It is also a good indicator on the effectiveness and quality of the advice provided by the financial advisor or insurance agent. Imagine if all the policies sold by a financial advisor or insurance agent lapsed, which means that the client did not renew their policies. To a certain extent, it does not reflect well on the advisor providing great advice. In other words, insurance or agencies will reward financial advisors or insurance agents based on how they fare in their persistency ratio on a 100% scale and reward them accordingly. Next, year-end bonuses and other insurer/agency bonuses. Insurance agents or financial advisors are also entitled to year-end bonuses provided they achieve the minimum required year-end bonus, which works in a pretty similar manner as the persistency bonus. It is calculated based on a different range. For example, if the agent achieved a commission of $12,000 a year, he or she is entitled to have a lump sum of $2,000 plus a certain percentage, and this lump sum and percentage will increase as the commission achieved in the year increases as well. So, apart from their direct commissions, there are also a lot of behind-the-scene bonus commissions that insurance agents can earn, such as incentive trips. Incentive trips are incentives that do not just come in the form of money, but in the form of soft incentives too. This encourages the agent to push their sales and hit their KPIs and return go for a sponsored overseas trip. At the end of the day, who wouldn't want to go on a sponsored trip to say Japan or Korea, so and so forth, and possibly multiple times a year? Hence, in order to gain this trip, some agents might try selling higher premium products to help hit their commission KPIs. Next, a very common and popular lingo among Singaporeans, both insurance agents and clients, are what we call MDRT, COT, and TOT. That's another incentive that insurance agents receive that comes in the form of industry recognition awards. And to achieve each of these awards, they must hit a certain amount of commission, paid premiums, and annual income. It is different every year, but on average, for example, to be recognized as an MDRT member, the agent needs to have at least 72,000 to 75,000 of commission and a specific amount of annual income and also another specific number of paid premiums. But these figures are always changing depending on the year. For example, during COVID, where things are tougher, the criteria to be an MDRT, COT, or TOT member becomes less strict and easier to achieve. Now, the misconceptions about commissions. After knowing how much commissions an insurance agent can actually make, naturally some clients would be skeptical and worried that some insurance agents would not prioritize the client's needs but sell plans that get more commission instead. Some misconceptions include, firstly, an insurance agent earns more selling whole life plans than personal accident plans. This is not necessarily true, as most personal accidents give 30% perpetual commissions for the entire lifetime of the policy, allowing the agent to actually earn from you as a client to year 10 or even year 20. Second, agents in non-tied advisory firms, in short we call them IFAs, are better than tied agents. Tied agents are insurance agents that can only sell insurance from their own company. Some clients may think that these agents are worse than non-tied agents like independent financial advisors, IFA in short, because IFAs would not be biased to a particular insurance company. However, don't be fooled. IFAs can still be influenced to push a certain policy because that company's policy may offer them better bonus commissions. For example, if the client consulting an IFA has a tighter budget but still requires an X amount of coverage, the IFA may show a list of lower premium plans to the client. But with that being said, amongst those chosen lower premium plans, the IFA may choose to push one of them and downplay the other based on which plan gives them the most commissions, instead of which policy that actually suits you more. Similarly, bank distributors, also known as insurance specialists, may not be a better choice because they are salaried workers who are paid commissions based on volume instead of client retention and renewals. This may encourage them to push single premium plans such as single premium endowment plan, even though the client may only be looking for protection coverage. Next, insurance agents earn a lot from investment-linked plans. Truth to be told, this is a very common misconception because, like mentioned, a factor on how commissions are calculated is the number of years that the client is paying for. So similar to whole life plans, insurance agents or financial advisors earn the same for whole life and investment plans. With all that being said, how much commissions do insurance agents actually make? The answer is that it varies. Of course, as mentioned, insurance agents can earn a substantial amount of passive income through commissions. However, commissions are, after all, a reward mechanism, and hence it depends on factors like the retention rate of the clients and the kind of plans they sold successfully. Be it a sincere sale or not, ideally, a client should be able to trust that the insurance agent has their best interest in mind and will recommend policies that would really work best for you. Then the commissions are well deserved and it's a win-win situation. But we should also keep in mind that, like everybody else, insurance agents are human and can be tempted by the monetary potential that these commissions give them, causing them to lose sight of their clients' actual needs and possibly push policies based on their income goals. After all, everyone's trying to earn their own rice bowl, which is why it is important to engage an insurance agent or financial advisor that you know will genuinely care about you, almost like a friend would, and will not take advantage of your situation to gain more capital. It is also good to do research and have some basic knowledge about the different insurance plans out there so that you would know what you need as a client and know if an insurance agent does not have your best interest at heart. With that, thanks for tuning in. I hope through this episode, you know that how much does an insurance agent or financial advisor actually go about having our income. Thank you and see you next week.